take the individual deeper dives on the sector and aggregate that up and see what does it mean for markets at sort of overall index level. And the key findings here are that if you look at the companies in the key AI-related markets, which are Taiwan, Korea, Japan, and China, and you look at the proportion of the market cap that is exposed in some way to direct AI-related revenues, the rough numbers are that 70% of Taiwan's market cap has some AI exposure, about 41% of Korea's, 34% of China, and about 16% of Japan. But then if you do a broad cut and say, well, how much of that is so-called hard tech, which would be more the manufacturing of chips and data servers and so forth, which really are focused on the inference layer, the training of LLMs, versus the soft tech side, which is more the application side. Not surprisingly, Taiwan, Korea, and Japan are much, much more hard tech, almost exclusively in Taiwan's case and virtually like 90% in Korea's case. But almost all of China's 34% market cap is softer tech. So the emerging narrative that's coming out from DeepSeek is this sort of shift from the inference training layer to the application layer, and that incrementally favors China versus the other markets. And we felt encouraged by that because we're overweight China, we're market weight on Taiwan and Korea. And at the margin, that's the way that markets have been trading. If you look at the price action since China's return from the Lunar New Year holiday, as I mentioned earlier, China now, MSCI China, is up over 7% year to date, led by the AI theme, and that's actually the leading market in the region as of yesterday's close.
Yeah, and we obviously go through cycles here, and we're sort of in a strange phenomenon where it's sort of a hyper-growth, hyper-scaler phase still. But of course, everybody's been asking themselves, just how long the momentum can continue. And I guess with DeepSeek being kind of this inflection point where it's going to really spark wider adoption, wider innovation, wider app development, it also means that in the next few years, maybe we'll start to see AI as a product or service as being so commoditized that profitability for everybody shrinks. Is that a scenario that you see, and in what time frame?
So, Mandy, I mean, you've just hit the nail right on the head. So we were in Europe 2 weeks ago with my global strategy colleagues with a series of investor meetings and conferences really across the board. And at senior investor dinners, the conversation really turns on, effectively, as you said in your question, what sort of return is going to be earned on the very large amount of capex that's being done related to AI by the hyperscalers in the United States, which, as of the most recent aggregation, is about $310 billion this year and comfortably into the 200s last year. So well over $500 billion in 2024 and 2025 expected in terms of this investment. So there is some question about what kind of return will be earned on that. I think that's why the market is focusing on applications and also the emerging theme of physical AI, which is why the robotics theme has been gathering pace, as well as the automated driving theme. I would hasten to add that it would be incorrect in our view to say that it's all negative for the hyperscalers and all positive for the applications folks. There's a much discussed term, the so-called Jevons paradox, which is that as prices come down, as you've indicated, that can drive actually greater demand. So I don't think we should just say, oh, the time for the hardware side is over. But I think it is fair to say that there are more questions about profitability and growth. And given that many of the stocks in the U.S. have been trading at high valuations, that's put a bit of a damper on things and has shifted the incremental momentum to some of the emerging and higher growth themes, including the Chinese AI sort of softer tech application focused part of AI.